UnitedHealth Group. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. UnitedHealth has great growth at 12.57% per year going forward. A business this big that'll still grow at this rate is a wonderful thing. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. UnitedHealth has an average PE ratio at 22.73. Not too hot and not too cold. That's a fair amount of hype around the stock. Dividends should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. UnitedHealth pays an okay dividend at 1.48%. I ideally want to see a yield above 2%, but at this size, that's sufficient enough. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. UnitedHealth has amazing management with an ROE of 26.7%. We have an efficient business behind a stable company, which is always good. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. UnitedHealth has a high cash flow to the tune of $23.4 billion. If you wanted to expand even more, they have the cash available to grow that economic moat. Okay, as I said, these 5 metrics we just went over tell me what kind of business we're dealing with. With a business grade of 78, we're dealing with a good business. Aside from the average hype, everything looks quite nice. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, we know what kind of business we have, but let's see what the price tells us in terms of attractiveness. Nonetheless, UnitedHealth is worth $535 per share. Right now, we're looking at a fairly valued stock. Just about everything is priced in. Fortunately, not overly so. And now that we've got all the numbers down, we put it all together and get our final grade. UnitedHealth Group has a final grade of 75, and that makes it a good long-term investment. For me, that business is fantastic. The price is right to where it should be. If you want to wait for the stock to drop a little more, that's even better. But hey, after this video comes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.